Hey folks, Dan Frio here. Thanks so much for joining me this morning. I'm at my brother's basement trying to live broadcast to you guys. So I'm going to bring you the market news. It's actually a really good day today. We got the Dow Jones up. We got mortgage rates continuing to drop. So if you're looking to, mortgage rates, if you're looking to refinance right now or buy a house, hold off. You don't want to lock in just yet. So I'm going to go over to the next screen. This might get a little bit sketchy because I'm going to try to bring you guys on to the market news. So let's get over to it. Here's what we're seeing today. So here's what the market looks like today, folks. Hopefully we can get this, you can see me on your screen. So we got the Dow Jones up 382 points. We got the S&P up 74 points, and we got the NASDAQ up also 300 points. But here's what you're here for. You're here for these things right through here. So let's go to Mortgage News Daily and see where mortgage rates are for today. Here's the economic calendar. I apologize, folks. Mortgage I'm going to bring you the market news daily. Hold on one second. I just want to make sure that you guys can see me on the screen right through here, folks. So let's get over to Mortgage News Daily to see where mortgage rates are for today. Sorry, I'm trying my best to get to this thing. What is going on with mortgage rates? Okay, we got the Dow Jones. Okay, so let's get to it, folks. Sorry, I'm trying my best to get this all captioned together. So here's what we got. We got mortgage rates coming down. It's at 6.55%. I told you guys over the last few days, just hold on, because I'm expecting mortgage rates to come down. We're going to watch oil. Yeah, even oil prices are going up, but I want to kind of make sense of what's going on behind the scenes. So hold off on those rate locks, because here's what we want to get to. The Dow Jones, the S&P, and the NASDAQ are all up. We got oil up at 100 and what's that? $103. This is way over that $100 a barrel that we expected, and this is the oil that we've been watching. So as oil's going up, you're sitting here, and I'm kind of doing the same thing. I'm like scratching my head, saying, okay, now why aren't the markets really retracting off of this? Well, let's get over to the MBS market. Here's really why I came in today. I was like, okay, you guys need to know this. So here's what's going on with the mortgage rates. Here's what we follow on a daily basis. This is the mortgage bond that really makes everything work. So right up through there, you got to see if that number is green, and that's actually good news. That means mortgage rates are coming down. Look at this chart. So up in the bond market right through here, the price of the bond, as it goes up, mortgage rates come down. This is a huge move over the last couple of days. So here's what we had yesterday. Okay, the last 2 days. We had up and away. But on Monday, we had the market go up and then just kind of crash from there. And then yesterday, we kind of got reprieve. But let's look at a 5-day chart. This is where we were 5 days ago. Remember when rates were down? They were teetering in the low sixes, and then all of a sudden they spiked up to 6.5. Well, they're on their way back down. I've been telling you guys, don't lock in at these levels. Because, I mean, if you're closing within 2-3 weeks, you kind of have to lock in. But if you have a duration of over 30 days, don't do anything. If you're a homeowner, I'm going to give you some tools that I want to show you guys that you can use. So let's just go over, what the headline news is. Then we're going to go over the economic calendar for this week and in the rest of the week, so I can kind of show you guys what's going on there. And then I'll give you my forecast on when I think rates are going to go and the whys behind it. So the first thing is, let's get to mainstream media and see what they're talking about today. So you go down through here, and it's all we want to focus in on right now. We threw out the technicals. We're like, okay, we don't really need to look at the economics like the jobs report, inflation. One, we know inflation's above 3%, and the Fed wants it at 2%. So the Fed's not going to cut rates. Okay, so now we want to look at is they've been saying, okay, now the Fed, there's a great chance the Federal Reserve is going to increase rates. Steve Leisman said one day there's a 50% probability in like June or July. I'm going to kind of debunk that. But here's what the markets are looking at. They're looking at oil right now. They're looking at the other pieces of the market. And what I don't understand, and you can watch, I got CNBC and Fox News and all these business channels on. Everybody's sitting there scratching their head saying, okay, we knew if oil hit $100 a barrel, it was going to be really bad. Now it's hitting 110. Could it go further than that? If it does, why are the markets actually cheering this? I think maybe they think there's a resolution to this. But the good news about the bond market, if you're watching this, is when people get out of stocks because of fear, they usually go over to the bond market. Well, the good news, if you're a homeowner or home buyer, this is what's happening. Okay, so a 36 move plus 35, well, it's 35 now, a 35 tick move, you're going to see mortgage rates even drop lower than this. So let me see if I can get to all the mortgage rates. I don't know why this is coming up this way today. But, okay, 6.55, that's where the 30-year fix is right now. It's down 9 ticks from where we were the previous day. So we had this reprieve. I want to show you this. Here's what the bond market did over the last 2 days. Okay, so yesterday we kind of had this, and this equated to lower rates. But now we're all the way up here. So all you need to understand is these rates are going to go down to maybe 6, 4, 5. It could be that big of a move. So almost an eighth of a percent. So between yesterday and today, you're probably going to get an eighth of a percent reprieve. So if you got a quote already, I'm going to give you some tools for that. But let's move along further and just say, okay, based on today's economic news, what's the market looking like? Well, we got some news on housing. Okay, the housing prices. Well, let's look at it here. We got Case-Shiller index coming in, and it is, well, it says negative. It came in a little bit lower than expected. But the last reading, if you see here, this is the Case-Shiller index year over year. Okay, what this tells us is what home prices nationally did. Okay, last reading, home prices were up 1.4% year over year. Okay, and we've been calling that. I kept saying, okay, you're not going to see a housing crash. The reason being is people are stuck in their homes. But what happens is the only way you have a crash is when you have an excess of something, like a massive amount of something. Okay, what causes that? Well, you don't have a massive amount of people putting their houses on the market because they don't have to. So if you want to sell your house now, you can, because if you bought in the last few years, you probably have a good amount of equity. But if you don't have to sell, you're not forced to push your house onto the market. That means housing inventory is going to be squeezed. It's still more than where it was, but you don't have, the demand isn't enough to pick up the differences there. So you're basically going to have equilibrium in the housing market. So don't overbuy in this market. If you're in some markets, that might be a little bit good or frothy, just maybe hold back a little bit. It's just the beginning of the spring season. Rates are going to come down a little bit more. But let's get over to see what the rest of the news is. So the Case-Shiller index year over year, like I said, is up 1.2%, not down 20% like a lot of people were telling you. Month over month, that's a little bit down. It was negative 0.1 previously. It stayed right there. And then the Chicago PMI, we're not going to look at that. It's basically, whoa, it's a lot lower than where it came in. So these numbers are telling us right now housing prices, they're kind of like the employment numbers. Now let's get over to Wednesday. Here's what we got. Now we are going to start looking at the technicals because eventually the Middle East issue is going to be over. I'm quite surprised it's been going on this long, but maybe that's an inclination of maybe Iran was a little bit more prepared than we thought. And what could have happened if they given them an extra year or 2 or 3 to do what they need to do? I'm just saying, just something to think about. But let's get over to the jobs report numbers. So here's what we got on Wednesday. We're going to get some jobs readings. ADP payroll reports coming in. Now they're saying last reading there was 63,000 jobs. I'm hoping this is like 50,000 because you need 50,000 jobs each month to kind of just have an equilibrium there. Then you're going to get retail sales, manufacturing numbers. This is going to give you some reading on the consumer, retail sales, and then also manufacturing and some inflationary numbers on the production side. Okay, so then we scroll down to Thursday. Remember, Friday's a holiday, so the markets will be closed on Friday. But then on Thursday, we get the government numbers on what the employment numbers look like and how much people are earning. So this is going to tell us, are people getting laid off? And if they do, are they able to get another job back? Plus, their earnings. Are they earning more than inflation? We know inflation's over 3%. Maybe it's 3.5%. So if you're not earning more than 3 or 3.5% on your income, you're actually going backwards. Okay, so that's this week in a nutshell. So what I'd suggest you do is these rates can change on a dime. They can change on a tweet. So subscribe over there. So every time I come up with a video, you get a post. But let's go back over here. We're at 33 right now, plus 33. So we're going to check that in a bit. Let me go over to you guys and let you know if you're a home buyer, what should you do? Okay, so I talked to actually 3 realtors already this morning. They're putting in contracts, and I'm like, okay, we're not locking these rates. Why? Because of this rate they're here. If you have the bond market going up, you're most likely going to have rates coming down. Okay, the only thing that scares me is this right through here. This is what we call a gap. Okay, so when the market closes here and then opens way up here, this is called a gap. Many times it fills itself. Well, this week and last week it didn't. It continued that rally. So hopefully we continue this rally. And if we go to a 3-month, this is when rates were like 599. So we need to go all the way from here all the way up to, what is this, 100.43. So we need to go to 100. We need about a 200 basis point move in the MBS market. So we're on our way there. Are we going to get there soon? I don't think so. But at least we can get rates down into maybe the lower 6s just to help you guys out with home payments if you're looking to buy that first house. Well, let's say you're a homeowner. I got a tool for you guys. This thing just launched Friday. And his this is RateWatch 2.2. Now, if you sign up for RateWatch 2.0, you sign up for 2.1, please sign up for this. Okay, let me do a quick demo of this thing for you. And if you're a homeowner and you stayed with me, okay, hopefully you're still here. If you're a realtor, I'm going to show you something to your clients as they come in. They might be pre-approved, but let's get over and find what rate they can get in. Because your mortgage lender, they might be the weekends and you can't get a hold of them saying, okay, what's this payment going to be? Or you're like, out there, you put in your application all these places and you're like, okay, what's today's rate? I don't know. What's the fees? I don't know, because I get so many quotes, it's confusing. Look at this. Watch this. If you're a homeowner, go in here. Now, this could work for home buyers. I'll show you the trick on how to do this. If you're a homeowner, jump into this tool. I'm actually going to do a demonstration video and launch this out to all of our clients. But this is what I want to show you how powerful this thing is. So let's go in and say you have a loan. It's $440,000. That's about our average loan right now. You have a rate. You closed it at kind of the shittiest time of the season was in 2023. I bought my house. I got a 30-year conventional loan. It was November 2023 when those rates were just terrible. Actually, they were 8.25 at that. Let's just do that. The rates were 8.2 in actually December of 2023. Don't believe me? Do some fact checking. Then we're going to go through here. This is going to give you the numbers of what your payment looks like. Okay, your payment's most likely around there. It might be different because this is your principal and interest payment. Doesn't include your taxes and insurance. If you have PMI, that'd be on top of this as well. It's saying you have 27 years left and you have $744,000 left of paying in interest. Wow, you're going to pay over $1 million for that house. Well, let's go through here and say, okay, based on today's rates, what's my numbers look like? So based on Mortgage News Daily, this is going to do an analysis and say, okay, mortgage rates today, 6.7. It could save you a month. Your recovery time would be 12 months. But then you're like, oh, okay, that's pretty good. But what rate could I actually get? Well, let me give you this. So you're going to go in here. This is actually our live pricing engine. Now, it might not be up yet today because it is opening bell, but I'm going to say I'm looking at my primary home, single family home. I want to do a refinance. Yes, a refinance. I'm going to say my house now, I bought it, I owe $440,000. It's about $500,000 right now, so I'm going to put in $500,000. My loan amount is $440,000. That's my refinance. I live in downtown Chicago, 60623. I have amazing credit. And then I'm not in the military. So let's click this and let's see. Now, it might not give us pricing. It might say errored or whatever because the market is not open just yet. But I want to show you how powerful this thing really goes. Please wait while we find those rates. Here they are. Okay, so this is close of last night. So you got to be careful because these numbers, they can change just a little bit, but this should give you pretty much some solid numbers behind it. So right now, today, this person can qualify for 6.5. They'd actually get $1,100 back in credits. But if you want to pay some points and drive down that rate, well, you can go all the way down to here and pay these points. But here's the powerful thing about this. Let's say you're looking to buy. This is kind of the same criteria because you can just manipulate that number back there a little bit. But what other programs would I qualify for? If you click here, this is going to give you every program that you qualify for and the breakdown of the rates. So check it out. It is live pricing. This right now, because it is so early in the morning, it is not live. It's yesterday's closing bell. So that's the tools that we have for you today, folks. So folks, my name is Dan Frio. I'm the host of the Rate Update, and I'm also a licensed mortgage loan officer where I'm licensed in all 50 states as well as Puerto Rico. My goal here is to help you guys figure out what's going on with rates, understanding the real estate market, because here's the reason why I do this. If you're looking to buy your first house, it's confusing. I get it. But your biggest pieces of the puzzle are, do you qualify? What program is best for you? And what's that payment? So I'm working on a calculator for that, but I'd love to work with you. So if you're out there anywhere in the country, I'm licensed in all 50 states as well as Puerto Rico. I can change my slogan a little bit. I've been now doing this for over 36 years, but my slogan is this: one application, one credit pool. Stop there for a second. Wonder if you can shop the market and you can get, you can have somebody scan and review your loan criteria with 35 banks, just with one application, one credit. So we can make sure that you're getting the best rate and lowest fees. Can you do that? Yeah, you can do that. You're going to have to put your loan in all these places, have your credit ruined, and then get all these quotes back. I can do that right here. I can do it with one application, one credit pool. I'm licensed with about 37 different lenders associations. I work at a bank that we have an affiliation with these companies. We've set up agreements with them that we can use their programs and their rates. So join me each day down through there so I can explain to you guys what is going on with these and the whys behind it. I don't know why it's coming up that way today, but it is. Let's see if that works. Oh, there they are. So here's what we got. We got rates at 6.55. This is going to be down in this 6.4 ranges today. I told you guys, don't freak out. My short-term roll is 6.25 to 6.5. We're going to stay in there. Try to work down to the lower you can get. But that's how I can come into play for you guys. So right now we got the MBS market up 35 ticks in one day. So that is fantastic news. It might stay steady right there. The good news is we got over 98.50. That was a sticky point. So once we went over there, hopefully it's up and away. But you have to pay attention to these things over through here. But we got oil actually coming in the red. So right now we got the Dow Jones, everything looking, this is a pretty much of a Cinderella story. What I call a Cinderella story, when you got the Dow Jones, the S&P, and the NASDAQ all up. If you got money in investments, most likely you're making money there. You got oil down, 102. I wouldn't say that's down. This was 65. You realize this was $65 a barrel about a month and a half ago. This is where the inflation is, but you do have some bond yields coming down. That's great news there. You look at cryptocurrencies and it's saying, okay, maybe there is a little bit of a risk trade coming back on. That's basically telling me maybe there is some good news in the Middle East, especially in the Strait of Hormuz, because that's where the whole clog up of everything is. So that's it for today, folks. MBSs are steady at 35. Mortgage rates will be back down in the 6.4 ranges. And if you need some help with a mortgage, I'd love to help you out. So that's it for today, folks. God bless. I will give you an update tomorrow. I will. It's hit or miss with my mom right now. Hate to say it that way, but I'll keep you informed each day. So please subscribe down over there. So every time I post a video, you get an alert, and you can join me each day where I go over all these things and more. So that's it for today, folks. I am sorry that you lost my screen right now. I'm trying to work off of one screen, and it is really difficult. So thank you so much for watching. God bless. Have a fantastic day, and I'll see you tomorrow. If you need some help, I am around. To be checking my emails and my texts, but my whole team is waiting for you guys to help support us, and that's what keeps this running on a day-to-day basis. So thanks for watching, guys. God bless. I hope you could hear me okay, and hope you get to see me as well. So I'm trying my best out here, but I'll be gone the rest of the day visiting my mom. I would wish if you could say some prayers with that. It is that holiday week as well. So this is when miracles happen. So thank you so much for watching. God bless. I will see you tomorrow. I'll probably